Let's get some more of the day's market moves.
Yeah, James Gerrish from Shaw and Partners and author of Market Matters joins us now live in Sydney. Thanks so much for joining us this morning. James, what was your take on the overnight session that was? Of course, those comments coming from Janet Yellen, putting the jitters through those US equity markets, and we do look like we're set to open lower this morning.
Yeah, good morning to you guys. Yeah, a marginally lower open this morning. SPY futures are down 26, but I think there was some interesting moves under the hood last night over in US markets. So you made mention of Janet Yellen sort of flagging higher interest rates. Well, the bond markets were already factoring that in, so we didn't see a lot of movement across the US bond markets, but we did see it in the equity markets. So, stocks were sharply lower at one stage, but they recovered pretty well into the close. The Nasdaq was obviously the big underperformer. Tech stocks don't like the prospect of higher interest rates, but I don't think there was anything really new coming out of Janet Yellen overnight. But some of the, as we move into May and June, some of these sort of seasonal factors are starting to come into play. We had some of these risk, indicators of risk. So Bitcoin got whacked 5% overnight. We saw the volatility index up through 20. Hit a high of 21 before closing in the 19. So, some of the obviously the higher beta tech stocks were the biggest laggers. So I think we're starting to see some money come out of the higher beta areas of the market, and I think this is the foreshadowing a correction into the start of this month.
All right, okay, James. Then what sectors are you looking at the moment? I know you've been taking a look at retail. In fact, we've had Super Retail Group appearing at the Macquarie Group conference there, giving us a bit of indication of where it's travelling. How are you looking at the sector?
Yeah, retail is an interesting one. So there's been a lot of movement under the hood, particularly amongst the supermarkets in the last couple of weeks. But you're right, the Super Retail presented yesterday at the Macquarie conference. They came out with some interesting discussion points. We've also got Bapcor that is just presenting today, and they're out with a trading update this morning as well. So, obviously the backdrop for retail has been really positive. Their like-for-like sales growth for the first 44 weeks of FY21 has been really strong. So it's up 28% at the group level relative to FY20, and up around 26% relative to FY19. What they did come out and say, though, is that they're going to start highlighting numbers relative to non-COVID periods. So I think one of the challenges now for the retailers out there is the fact that we're going to get numbers comping on a really strong period. So growth is going to decline. So you look at consensus numbers on Super Retail, and FY22 is going to be down sort of 30% at the top line versus FY21. So they're going to have this. They're going to run into this sort of issue based on their own recent success in sales. So to me, I think the retailers have run hot. There's a lot of optimism built into the share price at these current levels, and sort of the rhetoric that came out of Super Retail Group yesterday was, yes, we've had a really strong run. Sales have been hot, particularly in areas of automotive, retailing, etc. But the future doesn't look as bright as perhaps the recent past has been.
James, talking about a bright future, let's chat about gold, obviously in focus, bouncing off some support levels over the past few weeks. Back in focus, of course, because of those inflationary pressures. We saw some US dollar strength overnight, but what does that mean for the gold sector here and those miners here in Australia locally?
Yeah, gold was up a couple of percent the day before. It was down about 1% overnight. So it's getting its lead from what's happening in the US dollar. So the US dollar rose a little bit overnight. It's been weak in the last few days. So thinking more broadly, you're right around the inflationary pressures that have been building. But I think it's a case of US dollar weakness is going to be supportive of the gold price moving forward. So we've seen a test a couple of dollars below that 1800 handle in the spot gold price. So a break up through that 1800 is going to be bullish for gold. I'm positioned on a positive side for gold, so we've got some large positions across gold stocks here in Australia, plus some of the the larger gold stocks over in the US market. So to me, gold goes higher, the US dollar goes lower as we enter what I think is probably going to be a seasonally more tricky period for markets in May and June.
And James, specifically, what gold stocks are you really liking at the moment?
Yeah, we've got Newcrest in the portfolio, we've got Barrick Gold over in the US market, and we've got, if you want a broad gold exposure here in Australia, the Miners ETF, which is from Beta Shares, that tracks a basket of global gold companies. Or if you want a physical gold exposure, the gold ETF from ETF Securities is another good one.
All right, and elsewhere in the mining sector, uranium has been in focus too. In fact, we saw a bit of a bounce with a couple of the stocks yesterday. What's driving that at the moment? Because obviously there is increased talk about nuclear power as a part solution as part of the decarbonisation effort across the globe. So, how are you looking at that sector at the moment?
Yeah, I think that's, I mean, some bounces yesterday is probably an understatement. We saw Paladin up nearly 20% yesterday. That is you're right in terms of the longer term thematic around uranium and the demand side there. We've also had a long period of under development on the supply side, so that's in our view likely to support prices. But in the real immediate term, what happened yesterday was Sprott, which is a global resource manager, is looking to take control of a large uranium ETF, which is the UTC, which is listed over in Canada, and move that onto a US listing. So what that does, it obviously beefs up the capital available to that ETF. It'll beef up the interest, and it sort of speaks to the rising interest that we're seeing in the uranium space. We raised money for Paladin about a month or so ago around below 40 cents, and the demand for that cap raising was really high, and the stock's up around that 47, 48 cents at the moment. So it's obviously there's a lot more money flowing into uranium, but I think just in the short term that was a pretty key change in the uranium space, and it speaks to more interest coming through to the sector in recent times.
And despite that massive rise yesterday, 20%, do you still see that stock as a buy? Perhaps any other uranium stocks at the moment that you're looking attractive?
Yeah, Paladin's their number one pick in the space. So trading around 50 cents, it's still a long way from. This is a stock that was trading, I think, from memory, around the $6 before the Fukushima tragedy took place. So uranium has gone through an extended period of really no development going into it. Paladin's not a producer at the moment. They've obviously got a plant that they can get operational very quickly, but they still need prices to rise from here to make it feasible to get that plant up and running again. So it's all based on what the outcome, the future outcome on prices are. But you're starting to see, these are dirt cheap levels. There's a lot of risk in there that the uranium price doesn't continue to appreciate. But from a high risk standpoint, I think it makes sense here to be having some uranium in portfolios. And there's a uranium ETF listed over in the US market that's also an interesting one. It is the ticker for that escapes me at the moment though.
Okay, well, it's one to look at least. You've alerted us to it. James, always good to get your view. Thanks so much for joining us.
Thanks guys, have a good one.